Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima Kooima Varilek, and we have a lot of green on the board. And both grain and livestock futures trade this morning. And Brad, we had a little pressure in the feeders with the higher corn market, but even feeders are looking pretty strong this morning. And what a week in terms of the live cattle futures. We got above these breakout areas you and I talked about last week, above the 100-day moving average. I'll start off with it. Do we go back up and retest the old contract highs at some point?
Morning, Michelle. Thank you for having me on. And short answer, yeah, I think so. That's probably not enough, right? We need to collaborate just a little bit, go back to those old highs, is what I was saying yes to. A fantastic week on cash. And just to give you a little bit of a background, it wouldn't be a cattle market report if you weren't talking about bird flu or something, right? I mean, There's always something seems to going on in the background. What I thought was interesting last week was, pardon me, there was a couple of stories a couple of them are, I thought, 3 weeks old, but, they tried to kind of bring that story back into the marketplace in the middle of the week. Even national news in a couple of cases was talking about it. And the market seemed to go like, you know what? This is old news. We don't care anymore. And I thought the narrative, even from the CDC, USDA type sources, was a little bit better worded, in my opinion, anyway, where they said, hey, if you cook hamburger to 145 degrees, it's safe. If you drink milk that's been pasteurized, it's safe. Maybe, a little less of that spin of trying to make everybody fearful of taking a breath of air. So I thought it was an encouraging week that way, in the way the market handled the news. Now, the reality is the box beef went straight up.
No doubt.
Yeah, it seems like you and I talk about, like, well, how's demand? Because there's always some demand bears. When people don't know what to be bearish about, that's what they usually, grasp out of the sky, because how do you measure demand? How do you predict demand? If you can do that, you got a job here, okay? Because it's very hard to predict. That's why we work so hard on the supply side, because that we can kind of wrap our arms around. We don't, and I've said this over and over on your program, we don't see any signs that there's somehow some brick wall of, demand is over with. We kiddingly mentioned, like what a cup of coffee costs. And lately, our latest little endeavor has been to check out what it costs to watch TV. I don't think you're going to buy a ribeye once in a while. Come on. Ribeye was featured here in my hometown, choice ribeyes, for $10.99 last week. That is not high for a choice ribeye. I don't know. I think that I was happy too, though, to see the big up. And I heard Mother's Day weekend was very good. Last weekend was extremely beautiful weather here on the coast, especially on the East Coast. So I'm hearing the reorder business is probably going to be pretty salty here this morning too on the meat. Good. So I think that the beef thing is an awful good story.
That is. And of course, the big up in the box beef values last week was in part due to some of these slaughter cuts here by the packers. But needless to say, still to the plus side. In cash trade, do you think we're going to continue to be higher again this week or not? Because we're buying for a short week, right?
Right. Thank you for the old timer reference. We used to always say, right, short for a long for a short. And what we're talking about is when you have a long or a regular week, 5 days of work followed by a short. We've got a holiday Monday, obviously. So, typically, rule of thumb, you'd say, well, long for a short would be steady, softer cash, because the packer won't need as many. I don't know. That's kind of an old story, I think. You got a packer that's typically bought out 2 weeks or so. Whether that's as big a deal anymore, I'm not sure. But that is part of the deal. But look at last week's trade. As much as $4 higher on cash cattle here in the north. Cattle at 190 and a half. My brother sold cattle for me at 191, picked up. By the way, those cattle go Thursday.
Wow.
We are definitely between crops of cattle, old crop cattle, for the most part, 99% cleaned up, transitioning into the calves that aren't fat yet. And frankly, not to go to the same rant, but I mean, come on. Remember October, November cattle on feed reports? All of a sudden we were going to kill 2% more, 2.5% more for the first quarter. And in fact, we killed almost 5% less in the first quarter. And that's still where we're at. They're not out there. They're not here in the north. The show list this week for my local, the trade territory that I'm very familiar, which is Northwest Iowa, the edge of South Dakota and northeast Nebraska is very, very small. So I think the packer is going to have a big conundrum here. Does he do what there were some did on Friday, where they cut kill? That'll work for a little while, but they also have contracts that have to guarantee a certain amount of hours. And hey, let's not forget 2014. They ran 4 days a week for months because that's how many cattle there were. So obviously, I like the market. With cattle, you're always keeping your eye over the shoulder for the next piece of news that you can't anticipate. But from a supply standpoint, especially, the market feels awfully good to me.
Yeah. Well, let me throw a little bit of fly in the ointment, though. Wait, we just continue to see those persist. Does that make up for some of this tight number situation you talked about, or how much does it?
Well, it's a great point. No argument. It's disturbing to me too. I have a hard time explaining it because it's a mystery to me as well. I mean, case in point, I can fall back on my own experience. So I sold calves. They are delivered. I knew what they weighed, and they did exceptionally well. And they weighed 1492 compared to the last yearlings that I sold, but that were nearly 100 pounds more than that. I got to think that I'm very typical that these calf weights, that's why the weights always go down this time of year. I don't get it. Some of this, I think, is being boosted by formula cattle weights, where these guys, in order to meet the requirements of their formulas, maybe have to make them a little bigger to get them in where they need to be grade-wise. Maybe it's the weather. I guess I would start with that, going all the way back to the end of February. We didn't have that mud, didn't have all that stuff. We haven't had any kind of extreme heat here yet. Cattle performance have done it all. Those calves that I just referenced sure did. So maybe that's part of it. But even at that, I would still think that the weights would start to come down a little bit. You got a market structure too. Not to get too over the top here, what we're talking about, but the market function here, I would think with these tight numbers, if we're going to maintain beef production, at some point, I would think that futures would have to go premium cash to incentive us to make the cattle, feed them longer. Right now, it's the opposite. That the cash is a big premium to the futures, telling you that you sell them as quick as you can. It's not going to get better. It's going to get worse. And typically it would this time of year. So it's a bit of a conundrum. You talk about convergence futures and cash, and it's almost always this time of year because cash comes down to meat futures. I would suggest that this year might be different, maybe a little bit of both, but I think the majority of this convergence is going to come from the cash chasing the futures rather chasing the cash market.
All right. And we have an opposite situation, as you and I have talked about in the hog market. The futures premium to the lean hog index continues to kind of limit any of these rallies in the hog market, right?
Hogs are a tough one to call here. They've already gotten weaker than I thought. I'll be the first to admit that, Michelle. Super oversold down here now. It seems like we have a hard time getting cattle and hogs to go in the same direction. We've talked about those algos that trade the cattle hog spread. Is that part of it? I think the biggest bugaboo here is what you referenced at the beginning of that, and that is we continue to have this premium to cash, and the cash is just so sluggish to catch here. The demand, people that we talk to tell us that the pork product's in better shape and that demand's a little bit better. Stuff's moving. Time of year where you think it could move a little bit better. I'd like to, spin the news a little bit friendly, but I sure don't have much to show for it. After Thursday's big day, I thought we would get follow through Friday, and we didn't. We closed terrible. We need to get above Friday's high before I guess I'd even start to think about maybe the market trying to bounce.
Yeah, we've taken out some big support areas for sure. Okay, the corn market this morning is kind of following wheat and soybeans. Looks like maybe we're putting some weather premium in. But we had 4 down days last week in the corn. We couldn't take out some pretty key chart resistance. Do we get above that if wheat and soybeans, even if they keep going here?
Well, I was going to probably throw my bet on the fact that we were going to consolidate and maybe trade between this $4.95 to $5 level. I'm talking about D's corn and the 475-ish, just give or take. I thought the market held in a really nice spot on Friday and this morning overnight. That first breakout point just above like 3 different moving averages. So we held at a nice spot technically. Clearly the wheat has been the what's wagging the tail that's wagging this whole market here for sure. Apparently the rain event that was supposed to develop in Russia Ukraine didn't was disappointing, and that's what's driving the wheat thing. I think there's at least a bit of an argument for some. I'm not sure I'm in that camp of too late or delayed plannings here in the U.S. I'll be anxious to see this afternoon just how much progress we didn't make. I got a feeling it was a lot. I'm kind of in the mode, though, to answer your question. I guess I would rather sell rallies on the corn. The carryout was smaller, but 2 billion is plenty.
It still is.
Yeah, and how are you going to work around this 180 plus? And it may not be that, but that's what we got to deal with for a while here. Yield projection that we're going to have to dial in. So I would rather, I guess, sell rallies into that $4.95 to $5 level, and then if you're a trader, maybe you come out of it here down and get below 480. But I think it's going to take a little more of a real weather thing to get us to get above that gap there at 502 that everybody's watching.
Yeah, I'm in agreement with you for sure. All right, thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.